What's up, team? Traders War Room wants to thank you, the viewer, for coming along with us on this journey. Make sure you check out the description tab as it has links to online brokerage, social media platforms, and also everything covered in the video will have a link so that you can go back and research it at your time. Let's go to war.
What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Listen, I got your Monday market mashup, and we're going to talk about all things markets, okay? What the market did today, right? We're going to talk about options. Specifically, I'm going to break down the Greeks, and today is our first iteration dealing with Delta, okay? We're going to Barney size Delta. We're going to make it so everyone understands how it affects your options plays and moving forward so that you are better prepared today than you were yesterday, all right? Listen, I need you to like, share, subscribe, join the team, join the community, become part of the journey, all right? Twitter, Discord, Facebook, YouTube, there's a social media platform out there just for you, okay? So I need you to come with us on this journey and be an engaging part of the community. As always, if you're ready, follow me and let's go to war.
Traders War Room wants to remind the viewer that everything covered on this channel is for education and entertainment purposes only. You are responsible for every move and decision you make within your stock market journey. Let's go to war.
All right, team. Hey, welcome back. Listen, first and foremost, if you're new or you've been with us since the beginning, listen, it doesn't matter. Thank you for coming with us on this journey, all right? You are truly valued, and you guys truly drive the content that's on this channel and all of the social media platforms. So, again, thank you for coming with us on this journey. Now we're going to get right into it. As always, you know it's Monday, and we're going to get into our buzz report. We're going to talk about what's hot and what's not in the stock market. Let's get it.
All right, so first up, we're going to talk about the U.S. stock climbs to record highs on signs of economic rebound. So a lot of bullish sentiments for the economics of the United States going forward because of that job report. And so here we get into the article a little bit, and it's telling you that, since the market was closed on Friday, this was the first market's reaction to the latest job report. And you saw a bunch of sectors, boom and raise up very quickly. And you saw some other sectors that were looking like they were going to do fairly well. Oil and gas is one of those, financials is another one, and some of the healthcare, right? They didn't boom as much as we thought they were going to today in the market because a lot of other people were getting into those growth stocks and those tech stocks and things of that nature that have been beat up for the past few months, okay? So some of the stocks that you might have been into that you thought were going to rally and they didn't, don't worry. It was a normal pullback. I wouldn't say a correction, but a pullback definitely, because other bullish sentiments were going towards other stocks that have been beaten up far worse than some of the other ones. So perfectly normal, but we need to understand the market so we can move forward in the right direction. And here's an article, we were just talking about this, right? Goldman Sachs is talking about how energy, specifically talking about oil and gas, is a good play for future investors, and it's due for a pullback because it's been riding high for so long. And some of these other stocks that have been getting beat up, and we had just talked about that, the money's going to flow to them to get them back on board with where they were at previous before the correction. And these other stocks are going to do a slight little pullback before they go on their bull run again. So I definitely had a whole bunch of oil and gas and financial sectors, and I was, like I said, disappointed this morning when I saw them starting to dip, but bullish towards them, and I think that they're going to do just fine coming into this week and the following few weeks in April. And then here's another bullish story. All you're seeing is about growth stocks and rally from here, and you're seeing this all over the market. This is why the NASDAQ pops so big and all the indexes pop, is because people are very bullish about the jobs report and they're wanting to invest. And so some of these stocks that's showing great buying opportunities because they've been beat up for so long, people are starting to get into it because they'd been waiting on that job report before they dumped a whole bunch of money because they wanted to see how the market was going to react.
All right, now something new that we started, and I promised you guys last week we were gonna do it. So hey, man of my word, we're gonna put it out there, and we're gonna start it today. We're gonna break down options specifically to Greeks, and today's lesson is gonna be on delta. Okay, by the end of this, hopefully, I Barney size it to the point that you understand delta inside and out and how it affects your option plays and your position moving forward. So let's break down delta and get these Greeks taken care of. Let's get it.
All right, so before we get into how I view and I use my terminology for breaking down delta, specifically part of the Greeks, I want to give you guys a little bit of textbook type of terminology so that if you guys don't quite understand the way I break it down, at least you have some resources and reference. And this is going to be in the description, so if you want to click on it, feel free, just go to the description, look at it, and click on it there, and we'll have a couple resources for you. But delta is a ratio, sometimes referred to as a hedge ratio, that compares the change in the price of an underlying asset with the change in the price of a derivative or an option. Specifically, delta measures the degree to which an option is exposed to shifts in the price of an underlying asset or commodity. The values range from 1 to -1 or 100 to -100 depending on the convention employed. Now, this, remember, is for $1 of price movement up or down, and it's 0 to 1 for calls, and it's 0 to -1 for puts. And just for good measure, if you buy a call or a put option that is just out of the money, meaning the strike price of the option is above the price of the underlying asset, if the option is a call, or below the price of the underlying asset if the option is a put, then the option will always have a delta value that is somewhere between 1 and -1. And generally speaking, an at-the-money option usually has a delta that's about 0.5 or -0.5. All right, so let's get into an option that I pulled the trigger on right at the bell, okay? I saw this rising up, this underlying stock, UAVS, and I thought I liked the price action movement, and I've been looking at this stock since last week, and I was like, you know what, let's get in and see what happens to it, and I'm gonna do a swing trade on this, and hopefully can come out tomorrow or the next day with a pretty nice little profit. This was my option contract I decided on. I went in for a $7.50 call. Right now, it's worth $1.30 per contract. This shows my position. I got one contract. My current equity, meaning the amount of money that I have currently right now invested in this, is $130. My break-even price of the underlying stock is $8.25. My expiration date is April 16th. The current price is $1.30. Notice my equity is $130. The current price is $1.30. Contracts are controlling 100 shares of the underlying stock. So $1.30 times 100 equals my equity, okay? And my average cost, the amount that I bought in at, was 75 cents. So this contract costed me $75, and I'm up $55 or close to 74% currently when this closed. Now here you have your stats. I don't really want to worry too much about the stats right now. I really want to focus on the Greeks and specifically delta. So I want you to look at that delta. And at the time when I pulled this data, my delta was 0.7083. And that brings me to my next point. We need to understand that delta doesn't stay the same. It's not static, okay? It is going to change throughout the life cycle of your contract. And the price action is what's really going to pull your delta, moving it up or down, depending on where the movement in the underlying stock is at. So this is a PowerPoint slide I created. Now, forgive me, I noticed when I uploaded it that I had some formatting errors and some spelling errors. So one is the ticker symbol, okay? It's supposed to be UAVS, and then some of my things when I uploaded it, they shifted. So forgive that, I'll work on that. So the next time I got a more smooth presentation for you, but we're going to roll with this anyways. So important factors, you need to know the stock price. So the closing stock price was at $8.36. My option strike price is $7.50. My option premium price was 75 cents. And I wanted to make sure that you guys are tracking that option contracts are control of 100 shares of the underlying stock. All right, so my premium price that I paid was 75 cents times 100 or $75 per contract. And obviously a call is a bullish sentiment, you think the price is going to go up, and a put is a bearish sentiment, you think the price is going to go down. All right, so finally let's do the math, okay? So I had my contract, it was 0.75, right? My delta was 0.7083, we're gonna call it 0.71. So what I do is I take my price, 0.75, and I add it to my delta, 0.71, and I come out with 1.46 or $1.46. So if my underlying stock rolls up from the current price that I bought in that's associated with the delta, and it rolls up $1, that's the price that I should be out at. Now you saw that my ending price was $1.30. So if we're going off of this delta, right, that means I was on my way to $1, but not quite there. So I was about at 85%, 86% of that ratio on my way to that dollar, but I didn't quite meet it. So I ended up getting to $1.30 or $130 of equity that you saw in my underlying stock.
All right, team. That's it. Video's done. Okay, it's a wrap. Another day in the books. Listen, a new market tomorrow. Okay, so if you had a bad day today, forget about it. All right, we got a new day tomorrow. Okay, just try to learn from your mistakes. Be better prepared today than you were yesterday. Okay, and that's the end goal. Now listen, at Traders War Room, we look at the stock market like it's a war zone, okay? The stocks and the sectors, those are our battles, okay? We do it together, we do it as a team, we do it as a community, okay? We attack, destroy, and conquer. We're surveying the battlefield. We're looking for the opportunities to strike hard and strike quick and come out with profit on the end, okay? That's the end goal, and we want to learn and expand our knowledge and understanding of the stock market, okay? So, as always, if you're ready, follow me, and let's go to war.